Good day, ladies and gentlemen. So today I want to explain why some of your fair value gaps get tapped into instantly while some take some time before price returns to the level. Okay, so I just want to give you that knowledge. All right, so before I delve right into it, for those that don't know what a fair value gap is, I'll quickly be doing an intro. I'll just quickly explain what a fair value gap is. Okay, so a fair value gap is a price action level whereby the wick of the first candle does not intersect with the wick of the third candle. So it's always in a three candle system. All right, so when you have three candles like this, you can see the way I'm drawing it. When you have three candles following each other, because they have to be consecutive candles. Okay, so when they follow each other like this, if you draw an horizontal line across the wick of the first candle and then you notice that it manages to intersect with the wick of the third candle, in such a situation as this, there is no fair value gap. Okay, so it means there was what's it called, equal buying and selling. There was buying and selling throughout the printing of those three candles. Okay, so no side was more than the other. Okay, so, but if you have a situation whereby, let me quickly draw this, you have something like this, and then you have the second candle right here, and then you have the third candle up here like this. Okay, and if you draw an horizontal line across the wick of the third candle, and you do same for the wick of the second candle, and you notice that they do not meet, then in between them there is a gap. It means that there was more buying than selling. That's if it's a bullish fair value gap. If the candles are moving upwards, it's a bullish fair value gap. If the candles are moving downwards, it is known as a bearish fair value gap. So the general idea of this system is that price is expected to return to that level in order to balance it up. Okay, so it's also called an inefficiency. So price returns to that level in order to balance it up. So those that wanted to buy can also buy at this level when price returns there. Okay, so now that you understand the concept of fair value gap, I'll now move on to explain why some of the fair value gaps get tapped into immediately while some take some time before price returns there. Okay, so I've pointed out some examples already. The thing is, if you have your three candle system, let's say this is your candle 1, this is your candle 1, okay, this is candle 2. You can see that they follow each other consecutively, and this is your third candle right here. Fine. If the third candle is what determines whether your fair value gap will get tapped into immediately or whether it's going to take some time, okay, before price returns to your fair value gap. The third candle is what determines it. Okay, so if the third candle breaks and has a body close, as in it breaks the wick of the second candle and then closes beyond the wick of the second candle, it implies that your fair value gap is going to take some time before price would return to it for you to be able to use it to trade. Okay, but if the third candle closes in such a way that it does not close beyond the wick of the second candle, it's okay if it closes at the same level with the wick of the second candle or a little bit beyond the wick of the second candle. But if it goes, impulsively away from the wick of the second candle, it implies that it won't get tapped into instantly. Okay, so in this situation, what do we see? You can see that the third candle, the body of the third candle, look at this right here, the body of this third candle right here did not close beyond the wick of the second candle. So it means your fair value gap will get tapped into immediately. So let me draw out the fair value gap so that you can see it clearly. This is the fair value gap. You can see that the wick of that third candle did not intersect with the wick of the second candle. Okay, sorry, it does not intersect with the wick of the first candle. So this is the gap right here in between. So we have the gap right here in between. Okay, so you can see that just after the third candle, the next candle did what? It came back in filled up the fair value gap and gave us an opportunity to actually sell. You can see the massive sell which you would have made money with. Okay, so understanding that this third candle did not close beyond the wick of the second candle, that will give you an extra idea, like a foresight. Other traders that don't know this won't understand. They won't know that, okay, this fair value gap is going to be filled instantly. It's not going to take time for price to come back there. Other traders that don't know this won't have that knowledge. Okay, but as an advanced trader, you should just have it as an idea that, oh, if this particular third candle that formed my fair value gap, if the body does not close beyond the wick of the second candle, then there's a very high probability that you are getting an instant tapping. Okay, so let me go to the second type of fair value gap so I don't make the video too long. Okay, so this is the second type of fair value gap, whereby the third candle impulsively moves away and breaks beyond and closes beyond the wick of the second candle. So these are the three candles I'm using. Let me point them out. This is my candle 1, this is my candle 2, and this is my candle 3. Okay, so I'll use horizontal lines to depict the levels. All right, so you can see that there's a gap in between. Look at this gap right here. This gap right here is my fair value gap, and you can see that the third candle breaks above and closes impulsively beyond the wick of the second candle. So in a case like this, don't expect an instant tapping, and it is very logical, because for price to move impulsively away from the second candle, it means that the buying momentum is crazy at that point. So even though there's a fair value gap formed, there is no time to tap in to the fair value gap instantly. Price want to push up for some time, so later price can then reverse and come to fill the fair value gap. Okay, so when it comes back to this level, it's going to give a reaction. If it's a strong downtrend, it will just give a reaction like a pullback and then break the level. Use it as an inverse fair value gap to move lower. Okay, but if it's not a strong downtrend, price can kick off a new uptrend from here again. Okay, so basically I just decided that I will give you this knowledge today. All right, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.